Hi, this is Sheldon here from the Currency Advisory Desk with today's report. Well, we had the IMF release its global outlook for 2013 yesterday. Now, they are predicting a slowdown in global growth from 3.5% to 3.3%. Now, as far as India is concerned, their report has forecast a lower rate of growth at 5.7% versus 5.9% predicted earlier. Another heavyweight reported a disappointing set of numbers yesterday. Reliance Industries Limited reported lower than expected revenue growth for the Jan to March quarter. However, in spite of all these events, the US dollar has weakened against the Indian rupee. Now, the dollar-rupee pair closed at 54.23 yesterday as it finally managed to break the support of 54.30. Now, we attribute this weakness to the global factors as the dollar has weakened against all majors with the exception of the yen. Now, the US dollar index is at 81.90, which is down from yesterday's highs of 82.61. Now, traders can go ahead and short sell the dollar-rupee pair at around 53.95 levels for a 20 to 30 paisa gain in the spot. Now, the euro is trading at 1.3177 against the US dollar and was up by around 1% yesterday. Now, weak US data, which included a decrease in building permits and CPI, helped support the euro and the pound against the dollar. Traders can go long in the euro-rupee pair at around 71 levels in the spot. The pound was also tracking the euro and we saw it hit an intraday high of 1.5379 against the US dollar. Now, the British CPI came in as expected at 2.8%. However, this is well above the Bank of England's target of 2%. Now, we expect the pound to strengthen further to around 1.5450. As long as the inflation rate is above the target, we do not expect the Bank of England to announce any fresh monetary easing measures. Hence, we expect to see a strong pound as compared to other currencies. In rupee terms, traders can go long in the pound-rupee pair at around 82.60 levels. Now, the US dollar has resumed its rally against the Japanese yen. After hitting lows of 95.83, the dollar is back at 98.30 levels against the yen. However, the G20 meeting, which will be held tomorrow, could add some strength to the depreciating yen. Now, we advise our traders to go long in the dollar-yen pair only if it breaks the crucial resistance of 98.90. Now, we expect the dollar-yen pair will break the important psychological level of 100 if it is able to sustain above 99.40. As we have seen in the past few trading sessions, the yen has retreated from 99.95 at least twice against the dollar. Now, while the fall in gold has wiped out at least $560 billion from central banks, this may be a boon in disguise for the Indian economy. The lower rate of gold will help rein in the current account deficit as it will help cut import costs by around $7 billion. Now, this, along with the fall in crude oil prices, raises hopes that the RBI will go in for another rate cut on May 3rd when they meet to discuss the monetary policy review for the quarter. As we all know, a rate cut will only increase the FII inflows into Indian equities, which in turn will help strengthening the Indian rupee against the US dollar. Well, that's it from the Currency Advisory Desk. Thank you.